All right, what's going on, y'all? Just hanging out, and figured I would see what everybody's up to, see if we can get some folks in here, maybe have some chat, um, talk to anybody for half hour or so. And I know it's going to take a second or so for people to show up, but hopefully we will get some folks to show up and have some great conversations. But nothing on my mind that I really am truly focused on today. I do want to make a video about Amazon. I do want to make a video about some of my other investments as well. And so, really looking forward to potentially doing that in the next day or so. So, should be cool to be able to knock those out. And then, curious what other folks are truly wanting to hear about, talk about. Boondock, what's going on, my guy? Saw on Palantir Weekly Chat yesterday. What's up, man? Yeah, I was on Palantir's Weekly Chat. Normally, I chime in, emit, send an invite, and extended an invite, and I was just lazy yesterday, so didn't end up getting involved. I was in the chat though, but I like some of your messages that you're writing in the chat. They were pretty funny. It had me laughing. But but yeah, I'm trying to think what other sort of things I want to touch on today. Portfolios had a pretty good resurgence a little bit, so that's cool. Oh, 9 people joined up. That's what's up. So we had nice resurgence, a couple percent here and there. So it's nice to see the portfolio just take a little bit, like get a little taste of it, right? It gives you a little bit of flavor as to everything's not all doom and gloom, right? Like it has kind of been for the past 13 months or so. It gives you a little bit of flavor of like, hey, the markets can go up. And yes, I am making some great investments for the long term. You start seeing them go up, 5, 10%. You can see how quickly, things can turn around, just like how you might be losing 10, 20, 30, $40,000 in a day, it can go the other way too. And after a couple days, that things go really, really well. But Ethos, what's going on, my guy? Hope things are going well. Dropped a deuce on the live like Chris. Yeah, man, I think he straight up was in the bathtub playing with rubber duckies last night. I thought it was pretty funny. But Chris, as always, I always welcome his opinion. I do think they for Palantir Weekly, I did think they spent a little bit too much time on the carp expensive gate, I guess we can call it. But I just actually had a great conversation with Darton, and expect some clips to come out of that. The internet was kind of messing up a little bit, so I think we might make some clips and hopefully get some good material out of that. But we're going to reschedule the interview for when his internet's a little bit better. But yeah, we chatted a little bit about that, and I think both of us are in agreement that don't think it's too detrimental to the organization. Tatiana's downstairs, man. Yeah, Tatiana's just downstairs. So I just drove her around to go get some groceries. So, but yeah, I'm kind of curious. I'm not 100% sure what's going to happen this upcoming year. I think how am I say? I'm a glass half full kind of guy, and so with glass half full being, I honestly think that my initial reaction to everything that's kind of going on, inflation going in the right direction, layoffs starting to happen, stuff like that. My initial inclination is to think that the Fed is probably going to peel off the gas a little bit, but I think in reality, it's going to get worse. I think the more time I kind of think about it, and the rhetoric that I hear from the FOMC, I anticipate that this end of January, 1st of Feb meeting is probably going to be another half point, and with the half point raise, it's going to probably send the market into a little bit of a pullback, if we don't pull back before then, right? So, of course, we kind of hit, if you're looking at channels, I'm not really a technical analysis guy, but you're looking at channels, we're at the top of the channel from kind of where we have been established over the past year and some months. And so my thought process is we're either going to be down the next couple weeks, or we're kind of we're probably either going to fizzle out over the next couple weeks, or we're going to break out of this channel. And the next week or so, we'll definitely be able to tell you whether or not we're going to break out of this channel or not. But I'm probably a firmer believer that we're probably going to turn around and enter this channel until some more certainty goes on in the markets. And until then, man, I think we're going to be either sideways or downwards. And I think the first time where I think we might see a glimpse of hope is maybe the March meeting. And by that point, you'll have the January CPI. You'll have some of the year-end results obviously go all the way through. You'll have January CPI. And I don't know if by the March timeframe you'll have the February CPI or not. So basically, you'll have a lot of the full year 2022 earnings to be able to dissect that. And you'll obviously have the point raise or so from what's going on in January. And so I anticipate March will probably be another quarter point hike. And then I feel like we might wait it out. And I think after March, I think it doesn't show up again until like May, if I remember correctly. I don't think there's an April meeting. And so maybe that time between the March meeting and the May meeting, maybe it's a June meeting, I don't know. But I anticipate that that'll probably start being to the point where they start backing off. But I think people are anticipating they're going to start backing up, backing off more and more. Am I still using M1? I like M1, so don't get me wrong when I state this. But no, I consolidated a lot of my positions, and it was just for ease of taxes. At one point, I had so many different accounts. So I'm not against using M1. I think M1's a great product. Especially for the folks that have a little bit more trouble designing their portfolios. So I still recommend M1 a good bit, but I'm no longer using M1 for the time being. Let's get to your take. Do you like people being upfront or going around the point when it comes to business? I'm more of a person that it depends on who you're talking to, right? It depends on if there's some people like anything in business, like we saw yesterday, right? I mean, in the poll that Amit gave in the live stream, 40% of people hated it, 10% or 60% of people loved it. And so if I'm ready for an answer, I like it to be point blank. If I'm uncertain about an answer, having context and seeing where somebody's feelings are at, I like to feel it out. So it's not a yes or no answer for me. I mean, if I'm very knowledgeable about a topic and I'm just ready for an answer, I need that bluntness. But if I'm somewhere where I'm indecisive or I'm uneducated on something, I need that love. I need that love is probably a bad word. It makes me seem like a little bitch, but I need some context, and I don't want to say spoon-fed because it makes me sound like a child, but I need to be spoon-fed a little bit for me to kind of understand. Like if I needed to make a decision about, I don't know, furniture, like I'm not an expert on furniture, right? Like I happen to like the two couches that I bought. I happen to like them, so I bought them, right? But if somebody made me make a decision, like I had to try a bunch of different couches because I was like, oh, do I want to be a fancy bitch and get like a modern couch, or do I want to, you know what I mean? Like I didn't really have that, straightforwardness. And so, whereas like with business and work and stuff like that, I'm much more like get to the point, blunt, tell you how it is. This is the risks. That's more so how my brain works for business. And so it really depends, right? If I'm trying to choose a software, very much different than like if I'm trying to make a decision about finances, right? So I can see both sides. Richard, thanks for watching, man. I really appreciate it. Really do appreciate it. I know I've been making videos for a long time, rather sporadic, and the portfolio has obviously taken a life of its own. Probably when I first started making videos, it was like $150,000 portfolio, and now it's grown into whatever it's kind of grown into. And I know I've taken some different steps throughout there where I was very dividend focused and I was kind of balance focused. And I started dabbling into technology and stuff of the like, to the point where, yes, I made $24,000 in dividends last year, which is awesome. But at the same time, I'm not trying to focus wholly on the dividend aspect of things. I'm trying to focus on the balance. And hell, I'd much rather have $24,000 in dividends coming from SPY than having a decent portfolio and say like a JEPI and MO. I love JEPI, so don't get me wrong, but like, they're higher yielding companies. And so I'd rather have $24,000 in SPY where I know I'm going to get that growth component. And let's be blunt, I could easily turn the portfolio that I have today into making something that's $60,000-$70,000 a year in dividends and, go move to Asia or something like that. But I think it's too soon for that. Like, I'm not done. I'm not ready to call it quits on working just yet. I still feel like I need to find myself a little bit and see if, the corporate life is something for me. But yeah, I could do that. But I think in all honesty, if I want to break through any sort of like financial ceiling to get somewhere where I feel like I could truly get to the next level, because let's be frank, with where I'm at today versus like 3, 4, 5 million, my lifestyle is not really going to change, right? But breaking through a ceiling where it's like talking about 8 figures plus 10 million, 15, 20 million, that's a whole nother level, right? Like, yes, there's some small things from where I am today versus say like 3 million, 4 million, 5 million that I could tweak. I'd probably live in a decent house as opposed to this apartment. I'd probably drive. Actually, the car I drive is probably the car I would still drive. I love the Tahoe. Tatiana, as Ethos would talk about. Maybe I'd have some more real estate, but nothing would be really that much different, right, between now and where I would get if I had 5 million. And really, the only place I would get to truly a little bit different is if it was 8 figures or more. And so, can you do that by focusing on annual dividend income? And I would say the answer is no. And so, if I decide to give up and forfeit, say, getting to 10, 15, 20 million, then, I'll focus on the dividends again and just kind of like use that to kind of loaf around. But for the time being, I'm not ready to give up that kind of like upper echelon of wealth as of yet. I think it's more of a challenge for me. It's not because I need it, but it's more of like can I challenge myself and create that economic value that would come with getting to that 8 figure sort of mark. So when housing market crash, I think we're still in its infancy of a housing market crash, and I don't know. I'm still under the belief that some areas will experience one, some areas will not. I do think it's funny though. Like, I've heard this a lot from sales. I think some people are completely biased, like salesmen are completely biased about what happened in 2020, 2021 for housing, for cars, and they're still just like lying through their teeth a little bit. Like my one buddy went to go buy a car and they were like, I'm gonna do something I haven't done in a very, very long time. And that is, I'm gonna offer you this car at MSRP. And I'm like, my guy, nobody's buying cars right now. Like, let's be frank. Like, stop talking through your ass. Like, you want to make the sale. You don't need, like, you need to make the sale. You don't want to make it. You need it. Versus in 2021, if somebody was just like, you'd be like, you're good, my guy. Walk off the lot. Like, we got somebody coming right behind you. 2022, 2023, it's not the same. You know what I mean? It's the same thing with mortgage. Like, the amount of mortgage companies that called me when I bought the Airbnb in December was absurd. I was literally getting 18 calls a day from random people from Killen, Texas, Pennsylvania, New Jersey, all these different mortgage companies, and it was just absurd. Um, so I have a feeling that I've seen some places here in Houston that have decreased their price by 25%. I've seen others that are still doing relatively well. So I think it all just depends on what market you're in. If you're in a very highly sought after school district and stuff of the like, it's going to be a lot different than if you're kind of in like this middle ground. Oh, it's a nice neighborhood, but it's like a stepping stone neighborhood, So I feel like entry level homes are still going to stick strong, and your highly sought after home areas are going to stick strong. They'll decline a little bit, but I think the places that are stepping stone neighborhoods, they're not 100% most desirable. Those are the ones that are going to take the hit. That's where I've seen 25% decreases and stuff. What's up, Hot Frank? One Lambo? I don't know, my guy. I can't fit in a Lambo, so I'd need a Lamborghini Urus if I were to get one. What is this? My thing is, if you're shopping at a Ferrari dealership, you don't complain about your Honda being expensive. Its performance, it's obvious the Ferrari is expensive. Yeah, man. I mean, you have to think like they're, um, Oscar, what's going on? Nate, what's going on? You have to think. I agree with you. Like, you're buying something that's a work of art, right? And, uh, maybe Ferrari not so much because it's more cookie cutter now, but than they used to be. But I mean, you're buying something that's more of a work of art. You're buying something that, has a certain purpose. It's exclusive. It's a part of a club. It's part of a community. Anybody can go buy a Honda. Not everyone can go buy a Ferrari. And I don't mean because of the price tag. I mean, even if you had the money, they'll put you through the ringer. You have to buy, Jay Leno talks about this a good bit. The guy is a car enthusiast, so, that's why I'm bringing him up. And he's like, I'm not going to own a Ferrari because he's like, Ferrari, he's like, they wanted me to buy this Ferrari before I bought this one. And he's like, I just want this latest Ferrari. I thought it was nice. It was beautiful. I'm going to buy it. And there's a lot of people like that. Then there's some people, like it's funny. For example, like Stradman. I like watching Stradman. I like his YouTube videos. I've been watching him since he got laid off back in, what was that, like 2016, 2017? I don't know. But guy's done really, really well. He owns a lot of Lamborghinis, not a lot of Ferraris. And I think the reason why is because he flips cars. Like I don't think he does it because he's trying to make $1 off of them. I think it's just because, he has a little bit of equity in them. He finances some of them. And anyway, I think Ferrari won't give him a car because of it. And I've also heard people getting cease and desists because they modify the Ferraris. So anyway, Ferrari's expensive. It's a club. Oscar, what's going on? I don't think I've seen you on the channel, so welcome. Nate, I've seen you before. What's going on? I'm in Houston, Texas. That's where I live. I've lived in this apartment now for 2.5 years and like it. If you were to invest outside the S&P, where would you look to? NASDAQ, semis? I don't personally like holding individual positions. You prefer ETFs. Hey, man, this is where it gets tricky, right? This is all personal finance, right? And so it's all about your perspective, what you're going for. What I'm going to say is coming from a guy who, has, I'll just be blunt. I mean, has done well. So what I would say and where I'm coming from is somewhere where, like I just mentioned, I'm trying to get to the next level, right? So I'm going to have my steady S&P 500 investments that are low volatility, but then I'm going to have my moonshots, right? It's my Rocket Lab, my Palantirs. It really depends on where you're going. Like you might, let's just be blunt. You have to understand where you are and your wavelength. And you have to understand what your tolerance is, and you have to understand the situation you're in. If you're somewhere that you're really just trying to get to the point where you're going to be able to retire at 50, 60 years old, then I would say just stick to the S&P. There's nothing wrong with that, right? But say you have the opportunity to get to a place where you could retire in your mid-30s, late 40s, or early 40s, late 40s, then I think you can get a little bit more speculative, right? So I think it just depends on a little bit about what you're doing. And it also depends on how hands-on you want to be. If you're somebody that looks at the market once every 6 months, I would say to stick to the S&P, my guy. But if you're looking at it every day and you're analyzing, you're looking at the quarterly reports, I think you could get a little bit more in depth with certain positions. But I think the one thing that traps a lot of people, if you're going to individually stock pick, I think you have to be a lot more involved, and you have to, like, what's relatable for, say, Caterpillar isn't going to be relatable for a real estate investment trust. And I think a lot of people will just assume that all stocks are the same and created the same. No, they're in different industries. They have different regulations. They have different tax write-offs. They have different ways of making money. They have different cash flow statements. Like a master limited partnership is going to trade completely differently than an S corp. So the key case and example is like Kinder Morgan used to be traded as a master limited partnership or just a partnership in general. And as soon as it transitioned to a C corp, the share price got cut in half. And it was just because you're no longer getting that distributable cash flow. You're no longer getting dividends through that, and you're able to finance it through the way that you are because it's a partnership, and the taxes get distributed to the partnership level rather than the corporation level. You move to a C corp, then you're starting to get taxed at the corporation level, and everything gets done completely differently. So if you don't know what any of that means, or it doesn't ring a bell or anything like that, I say you stick to the S&P 500 unless you truly want to learn. And I honestly, I'm just going to be blunt with you. Had I just stuck with the S&P 500 since day one, I'd have several $100,000 more than I do today. And I'm not trying to be mean or trying to be rude. I'm just saying, often very times, the simplest thing sometimes is the easiest. And I think too much when you try to fondle your money. That's what money is. Like money is literally a way, and like that's, how do I say it? Money is a way for other people to get their hands on it, right? Or any transaction that you do is another way for people to get their hands on it. When you buy a house, you're not just buying a house. You're feeding the mortgage company. You're feeding the broker. You're feeding the real estate agent. You're feeding. So there's so many people with the hands in the pocket, and it's the same thing with the stock market a little bit. So every time you make a transaction, it might be $0 now, but there's something to be had about it. So I would just be cautious. But if you're really looking for the dividend place and you're okay with a little bit less growth for more dividends, I like Devo and Jeppy here. And as long as you recognize that your upsides might be limited, so we go on a 10% market tear in the month of February, you're probably only going to get 5% return, but you're probably going to get a little bit of a dividend because of it, right? So it is what it is. You have to keep in mind, where you are in your perspectives and what you're okay with and what you're not, and shape your portfolio that way. And I talk about this all the time, so I'm going to make it quick. I'm not going to like drown on about it. Objective, time horizon, risk tolerance, how active or passive you want to be, how much money you're going to add. If you think about on all those different 5 things, what you're truly going for, right? If you're going for, I'm going to be trying to be as rich as possible and make as much money as possible. That's your objective. You want to be the next Jeff Bezos. You're not going to invest in Altria Group. You know what I mean? Like, in same thing with like the last part, which is how much capital you're adding on a very regular basis. If you have $1,000 and it was from your great grandfather and he passed away, and this is the only $1,000 you're ever going to get, you live paycheck to paycheck, and you can't seem to get yourself out of the hole, and you're trying to make something change for yourself. You're not going to take that $1,000 and invest it in a real estate investment trust that like just tries to match the S&P 500, right? So you're going to try to invest it in a moonshot, and if the moonshot doesn't work, you're going to be doing the same thing that you did. Versus if you have $1,000 every single month that you can invest, right? And your goal is to get to $1 million. I'll just be point blank. You have $1,000. You're trying to get to $1 million. You have to 1,000x your money, right? You have to add 3 more zeros to that $1,000 for you to get to your goal, which is 1,000x. What's the easiest way? This is going to be like super kind of maybe hopefully a light bulb goes off for some of you guys. What's the easiest way to have the amount of work that you need to do to get to $1 million at that point? Is add another $1,000. Because if you have $2,000, now you only have to 500x your money. If you have $3,000, you only have to 300x your money. Right? You have $4,000, you only have to 250x your money. So you could take on less risk and get to the same spot if the goal is $1 million. So I don't want to say work backwards, but I'm just saying what works for me, what works for Ethos, what works for Darth. I have this conversation with Darth all the time. I give him a hard time. I love the guy. I love his persistence. I love his continued work and goals for the personal finance community. But listening to someone like myself who has as much money as he has and has done relatively well, and versus Darth, who's kind of still just trying to find his footing in his career, and he's doing a really good job of it, and he's finishing up schooling, and getting ready for the travel nurse thing, and yada yada yada. He's where I was 8 years ago. So I understand his perspective because I was there. Dividends are a great thing. I fell in love with them, but I've gotten to the place now where I'm like, I made $24,000 in dividends last year, and I didn't even try. Like at one point, I think I was projected to make like 29,000, and I took my foot off the gas because I realized, okay, like if I want to continue down that path, I want to make $50,000 a year in dividends. I see the path. I know the path. But having $50,000 a year in dividends, like I'm not using the dividends today. So why don't I go for something that could really move the dial? If I move the dial, like I get to like $10-15 million, and then I want to get into dividends because I'm done and I just want to like live life, have kids, and do that family raising thing, then Um, I'm not at $50,000 in dividends anymore, right? Like if I wanted to switch 10, $15 million over, I'd be making 500, $600,000 a year in dividends. So that you kind of just have to realize where you are in your journey and what you're going for. Uh, so hopefully that helps a little bit. As a Palantir investor, I really appreciate having you cover Palantir and being in the stock also. Absolutely, man. Like I'm a stakeholder in their success. I started working with them back in when our company started working with them, 2016, 2017. They're great people. And I always told them before they left our office, I don't really talk to many Palantir people like that actually work for the company anymore. And I need to talk to the one guy I worked with. I want to shout him out, but at the same time, I'm like, I don't know if he wants people to know. So I'll maintain his privacy, but he's a cool dude. And if he's watching this, he knows who he is. But worked with him a lot, and then it was very early on. This is when like we had just started kind of getting, and once we started getting traction and started using the software a lot that they had built, Foundry, and some of the key applications, he moved on, and I was very upset because I really liked him. And I don't know who he ended up going to work for as a client, but I think he ended up going out to the West Coast. But what was he to say? Yeah, I just always wanted to be a part in their success story because I still believe that they will. And I've seen it since like so many things have changed in the organization for the better. So they used to like try to like back in the day, I think we were still uncertain as to what we were going to use. So we kind of like saw when we would open up Chrome and log on to the platform, we would see Foundry and Gotham and Apollo. And very soon we realized like, okay, well, we're not going to use really Apollo or Foundry or anything like that. So they would just kind of focus specifically on the Foundry piece, and now we have like 20 some different custom applications that have been built. So it's pretty dope. And so yeah, I just love the culture. The culture is completely different. The culture is like a what can we do to make things better, more efficient sort of culture versus like I've dealt with Microsoft and we have Amazon Web Services stuff. Like it's a very different interaction. And I think that if you're truly trying to get the gains and you're truly trying to get to the best sort of software that you can make, you need to have those difficult conversations. It's what works for a Boeing isn't going to work for a company that I work at. If you work for Jacobs Engineering, it's not going to work for an oil and gas company. You work for a solar company, it's not going to work for specifically an oil and gas company, right? You have to make custom applications. The backbone might be the same, but the actual applications will be different. And so I don't think people truly understand what it can be, right? Like I'm not using like what I'm using, and which I think is best about Palantir and Foundry specifically. The backbone is the same for what I'm using at the NHS and what I'm using at my oil and gas company, but the applications are completely different, right? So Foundry is just like a backbone, and the applications that get built on top of it are like what you would have on Microsoft your computer, right? You can open up Google Chrome, you can open up Excel, you can open up Word. It's the same exact thing. It's just Foundry is the database, like Foundry is the operating system that is kind of like the backbone to everything. It helps you collaborate. So anyway, hopefully that makes a little bit of sense. So um, that that I think is what's going to be the difference, right? Like not some ready-made product that is the same like Excel. Like Excel is a very valuable tool. As I had this conversation with Darden, Excel is a very great tool. I use it all the time. It's one of the things I open up every single day when I'm at work because I'm an engineer and engineers use Excel. But at the end of the day, like it's not very customizable. And in order to get data, I have to go somewhere else, mostly Foundry, to get the data to either put in Excel and make a graph that I like or what have you. So Kev, what's going on, my guy? Hope you're doing well. What are my thoughts about rental income properties, more specifically industrial commercial properties? I don't really know about specifically owning or industrial or commercial properties. I'll just be point blank. I own one Airbnb. I've been doing it for about a month. And it's a seasonal Airbnb vacation rental. So it's going to do really, really well this summer. We're almost fully booked. That's a lie. We're about 60% booked for the average of June, July, August. And we're 25% booked for September. May is completely open. Nobody for May. All 3 weekends in April. We have somebody renting right now. Some 2 weekends in February that I believe are rented. So right now, after within a month, those are all the things that we've kind of leased out already for the year. And we're looking like we're going to be just today, without any more rentals, break even after cleaning, after internet, after electricity. So we look like we're going to be about break even on it. But anything above what we get today. So I think for the year, we're at like 20% or 25% occupancy. So if we get closer to 50%, we'll be looking pretty good. But we don't charge nearly as much for the home in the off season as we do during the summertime. So, but anyway, any real estate, right? It's like stock market, right? What are you going after? What's your goal? Rental income property can be viewed very differently. You could have $1 million and be like, I just want something that's steady and holds its value and appreciates slowly over time, but gives me a 6% return or a 5% return every year in cash. Then you could buy a brand new house and rent that out. But if you want to get some serious equity value, you could buy a house and do some minor renovations and do some value add that way, and then rent it out in a neighborhood where you think that there's a good wedge where you can make some money. Industrial commercial properties are more so based off of cap rate. So you'd be looking at, let's just say, what kind of business is it and what kind of area it is and what kind of neighborhood, what kind of property is it. And I think right now it's going to be tough. I think the prices of those are going to have to come down if inflation and mortgage rates don't come down, right? Like mortgage rates right now are 5-6%. Sometimes even 7%. Actually, is probably 6-7% rather than 5-6. And so, especially on the commercial and industrial side, it's probably going to be more like 6.5 to 7.5%. And a lot of the cap rates for a lot of those big businesses right now are way bigger than that. If you try to buy a CVS building or a Subway building or a McDonald's or something like that, you're going to be looking at like a 4 or 5 cap, meaning if you invested $100,000, you'd be making $4,000 or $5,000 a year clear in income from it. Now, of course, those buildings are millions of dollars most of the time, so you'd be looking at $40,000 to $50,000 a year, and then hoping for appreciation for most of it. Obviously, if you're borrowing at 6-7%, and only getting a cap rate of 4 or 4.5, 5%, it's not going to make a lot of money, right? If not, you'll probably lose money. So you either have to buy it in cash or buy it at 50%, 60% loan to value ratio for it to actually make any okay money. And that's just a lot of money you'd have to have tied up. So prices are either going to have to come down on those properties, or mortgage rates are going to have to come down, or there's going to be some sort of stalemate. So then there's the short-term rental, right? Like what I'm doing, that's short-term rental. I had a tenant last week. I had a tenant this week. They're both different people. You have churn with that. You have to have people go in, clean the property. It's active. It's not 100% active, but it's active-ish income versus a long-term rental, right? And I honestly, I think with the Airbnb, we're going to end up with like a 20% cash-on-cash return, which is pretty good, especially in this environment. I think that's where we're going to end up. Versus a long-term rental, you'd be looking to get 8 to 10%, maybe. If you do some value add and stuff like that, maybe you get to the 15, 20%. Once again, that's active income, right? Do you have the ability to be active? Do you have the ability to help be a general contractor to yourself? Do you plan to have a property manager? Things those lines. Like there's little intricacies that you can't just be like, what do you think about real estate? Like I grew up around real estate. I think it's great. You can do a lot of value add. I saw small apartment buildings get little things added to them and be sold for a lot more. So it's very difficult to just be like, yeah, thumbs up, thumbs down about real estate. It's like the stock market, right? I think you really need to think specifically about what type of real estate works best for you. What type of stocks work best for you? It's personal finance, right? Maybe you're a guy that's a handyman, right? You can make some small adjustments. Carpentry is like your go-to. You love doing carpentry on the weekends. You're really good at it. You could flip a kitchen, hire an electrician. You could do the carpentry work. You could fix the cabinets. You could paint them up. You can, make them squeaky clean. And that's all this place needs. You could add $50,000 worth of value to the home. And then boom, there you go. You rent it out. You're now making a couple $100 more than you would have. You got some wedge on your property for equity pullout if you want it. You can rent it out. You can do whatever you want. So I think it just all really depends. Apologies going on like a tangent, but hopefully that gets you to realize like you can't just add such a general question. Otherwise, you're gonna get like a very general answer back. Thoughts on rental properties? I think they're great, right? Like, it doesn't help you at all. So yeah, hopefully that's really helpful. And I think that's probably one of the reasons why my channel doesn't ever do well, is because I try to teach you. I don't try to like con you into something. I'm not a magic man and try to be like, hey, this week I like Tesla. Last week I did, last week I love Tesla. This week I don't. And I'm going to make fun of Jeremy from Financial Education because he bought it, that sort of shit. I don't do that. I try to be upfront. I try to be honest with you guys. Hot Darth, man. Looks a bit exiting out of your window. Maybe he's not exciting. I live in Houston. So, yeah, man. If I make $3 million, I'm moving out of the U.S. ASAP, probably Mexico or Latin America. $3 million, man, depends. But if you have some good places to put the money, depending on what you want to do. If you want to travel a good bit, traveling's up for you. South America. I was looking at some. I've never been to Buenos Aires, but I've heard we have some stuff that we do in Buenos Aires for my company. I've talked to some people that have been down there, and I've talked to some other people that work for another business development company that I do some side work for every once in a while. And he was down in Buenos Aires, or I think he was Buenos Aires, but he's definitely in Argentina. George, what's up, my guy? You're probably not watching, but if you are, what's going down? And loved it. He was there for a couple months. So I was looking at some Airbnbs in Buenos Aires, and looks like some pretty good stuff. And I was, just thinking about that whole thing. Like, you could set up places around the world, and you could be, 6 months here, 6 months there, and breaking even, but you're paying for your houses, in times you're not there. Or maybe you have so many that you can just take trips, to all 8 different properties that you have scattered around the world, and just live life that way through a suitcase. It really just depends on what you want to do, man. It's personal finance. It's personal. And, but if it was me, I like the U.S., man. I'd have a home base here. I'd want to keep my citizenship, I think. But, yeah, I'd probably have some properties elsewhere for sure. Bring Darth and Frank on. Nah, they'd probably just want to talk about dividends the whole time. They're too cool. And it's not about beating the S&P over the long run. It's about what works for you, right? Like, the S&P is the S&P. And I think a lot of people, like, take this for example. Hedge funds, people crap about hedge funds not always beating the S&P. It's like, well, who said that the hedge fund's goal was to beat the S&P? The hedge fund's goal might be to never lose money and always ensure that you get a 5-6% return every year, or a 3 to 4% return a year. The hedge fund could be running money for the Johnson family, which is a multi-decade or multi-generation family that got rich off the Johnson & Johnson Trust. There's some documentary, I don't know if it's on Netflix or YouTube or what have you, but one of like the great grandsons of Johnson, the Johnson & Johnson founder, and his dad's a billionaire because of all the look at the Waltons, right? You think the Waltons are trying to make a 20% return a year? The Waltons are just trying to make sure the money doesn't go to zero and do philanthropic stuff. So you have to think not everyone's goals are the same, Darth, he doesn't care if his money goes negative. He just wants to make sure he gets a good dividend. He's all about those dividends. You know what I mean? And I was there before. Like, I'd had people, when I was focusing so much on my monthly dividend income, and I was focusing on, let's get to $200 a month, $300 a month. And a lot of you guys are there now, in that grind. And it's very, that grind can kind of delusion you, which is why I kind of switched back to S&P, like focused, the long-term growth focus, balanced focus sort of investing is, you're so like, you can move the dial, right? If you invest, you're like, oh, but I can invest in QYLD and get a 12% dividend a year. But keep in mind, you're probably going to lose 4 or 5% a year over the long term because it's an anemic growing sort of vehicle. So great if you're 75 and you need to get that last little bit of income. But, if you don't need all the income, now I'm not going to, I give Darth crap. Some of the investments that he's kind of shown are pretty good. So I can't give him a lot of fault. But some of the reasonings he'll have is just out the window. And it's because, I guarantee in 10 years, Darth is going to be a lot more like me than he thinks, which is focused on dividend growth investing rather than dividend only investing. And, I'm not saying dividends are evil. I'm just trying to present, the devil's advocate to be like, dividends are great, but you have to think like dividends are to help pay bills. And well, if you have a 9 to 5 income, that also pays your bills. So you have two things that are going to help pay your bills. For me, if I lose my job and I want to switch, I can switch. So, I think it's just about understanding where you're trying to be. If you're trying to just be like, I just need a couple percentage in dividends, then the dividend route's the way for you. Like, by all means, my guy, go ahead and do it. But I kind of outgrew it. I outlived it. I got to the point where I had enough capital where I was like, I got, let's just say 6-7 years worth of annual salary, not take home, but like gross before tax salary saved up. If I really need to utilize that, I'd probably get some sort of severance and stuff of the like, which would probably be another year's worth of equivalent salary. So I'd probably be okay for a couple of years, no problem. And I also have several income streams. I do the YouTube thing. I do some marketing for companies. I can write options. I can do those things to help generate a little bit of extra income. So it just depends, man. I think the perspective is a key thing. I made a video about this. Perspective is key. Somebody could tell me that the S&P 500 is going to go down, and I could tell you the S&P 500 is going to go up. We're both right? The S&P 500 will go down. I anticipate in the next 3 to 5 months it's going to be very volatile. But if you're looking 10 years down the road, it's going to go up. So we're both right. And I think what everyone is viewing things from their perspective, and somebody says something from their perspective, and they're more like, you're wrong. And, Darth is right in what he's doing for Darth, right? What he thinks, what he knows today is right for him. And I'm just trying to make sure he understands that in 10 years' time, when he's doing really well and he's passed his PA school and everything of the like, that he understands that there is another avenue and it's not just dividends. Some people only live that way, right? Some people like PPC Ian, like he wants to make sure he does really well. He does commercial real estate and he focuses on the dividend side of things. I don't think that there's anything wrong with that at all. So sorry, I was just checking to make sure that my headphones were still working, even though I don't really need them because I'm talking through the mic, but it is what it is. Can't believe people saying Karp said at Davos was detrimental. Hey, man, it's all about perspective, right? Some people are very concerned about the short-term stock price of Palantir. I'm concerned about the 10-year stock price. I'm okay if Karp focuses strictly on what's going on 5 to 10 years from now. But I think some people are more so focused on the quarter-to-quarter share price, quarter-to-quarter earnings. You have to think like earnings that is going to come out was made 18 months to 24 months ahead of time, right? Everything that's a culmination of everything that's been done for the past 20 years of the organization to the past 18 to 24 months, right? Very little in the past year and a half will have moved the dial for Palantir in the fourth quarter, right? So anything probably before Q4 of, I would say like 90% of the earnings is probably coming from things that were done prior to Q4 of 2021. That last 10%, maybe there's some little bit of work, some other finding tuning of contracts or something like that. Sorry, I'm about to sit up a little bit. I was tired of leaning back in that chair. So anyway, the same thing what Jeff Bezos said about Amazon. He didn't really care about the quarterly results because everything that he did was a culmination of what he had done 5-10 years beforehand. So it took several quarters for beforehand to really make up what that quarter was going to do. So yeah. 22, you have time in your favor. It's true, man. It's true. But I'd say the biggest thing with Hot Kev's really good about this, is constant contributions to the portfolio. No, Darth, it's important for you to be diversified in REITs with solid revenue and solid dividend growth. Not everybody, right? And that's the thing, Yes, oil stocks are near all-time highs. However, oil stock or the oil price environment and the gas environment is down 40 to 50%. So what do you think is going to happen with that? Coupling that with industry inflation. A lot of our meetings these days, keep in mind I work for an oil and gas company, costs have gone up for this 25%. Cost for the steel, 25%. Cost for this chemical, 25%. Cost for the labor, 25%. Everything has gone up 25%. What has the oil price environment done? Gone down 40%. So I think what's nice is that the average price for the year is probably in the $80 to $90 range because of the spikes that we had in March and June. But if we stay here today where we're at, margins are going down. Most oil prices are still, or oil stocks are still at all-time highs. Margins are declining. Prices are going up and environment's going up. Cost of services is going up, but the price has gone down. It's not going to look very good for the margins, is it? Plus, we're entering a recession. People are being laid off. Short-term demand is going to get hit. Probably partly offset by China coming back. But I think in the long run, you already have OPEC cutting supply because demand's not there. So when they're cutting supply, what does that mean? It means there's too much oil. What happens when there's too much oil? Price goes down. High oil prices bring low oil prices, ladies and gentlemen. So I still own oil stocks. I own Shell. But the bet and the investment to be in oil and gas stocks was in 2020. When everyone and their grandmother thought that 100 million barrels of oil demand would disappear overnight. What happened? In May of 2020, the oil demand went to 90 million, maybe 85 million barrels a day. Where are we today? We use about 100 million barrels of oil today, just like we did pre-pandemic. I thought oil stocks were going to zero. So anyway, I'm not saying don't invest in oil stocks. Just recognize that the environment which we were in 2022, 2023, early 2023, the environment that we were in mid 2022 is very different than the environment we're in early 2023 for oil stocks. The price environment has come down 40% from the peaks, $130, $135 a barrel. We're now down to $80, $85 a barrel. It's very different. Refining margins were exacerbated, right? So if you want to play the refining game, I hear you. The refining margins were exacerbated by the disruption in supply chains. Refining margins were never higher. You're talking $50 a barrel. That's huge. Average refining margins were probably anywhere between $6 to $15 a barrel. So keep in mind that when you're talking about earnings going forward, I think they're still slightly elevated. I'll double check when a few of the earnings come out in the next couple of weeks for Exxon and some of the other super majors. What I will say is a benefit for oil and gas stocks is a lot of them have paid down debt, so a lot of them are less reliant on cost of capital, especially in this environment. But I don't think people fully understand. Like inflation, just like anything else, goes up in certain sectors, right? So why your food costs more, right? Why everything costs more. So the fact that oil services costs to deliver wells has gone up 25%. You know, and somebody made a really good point. They're like, well, you don't need oil price to go up 25% for you to make the same. It's like, I get it, but like for like, it'd be nice if you could at least get something that matches inflation every year. It's the volatility of it is pretty rough. So what I will say is I don't think we're going to be going to $40 anytime soon on an extended period of basis, but 60, 70, 60 to 80 range, I think, is about where we should be. I was wrong. I think last year, and this is before the war broke out, I was anticipating anywhere between $70 to $90 a barrel. Maybe it was $60 to $85 a barrel was kind of like where I was thinking we are going to hang out. Then the war broke out. So I think you could up that. Probably hang out between $65 to $90 a barrel for the next 4 to 5 years. We'll break out of that trend, right? We'll go above it, we'll go below it, but I think we'll, the majority of the time will be set between that range. Anyway, enough about oil stocks. Just be cautious. If you've made money on it, if you were fortunate to listen to me 2 years ago and taken my thought process, I'm not saying I'm some sort of wizard. I'm just saying, with everything, sometimes you make some good calls. I'm in the industry, so I recognize that oil was never going away. We were still going to make 100 million barrels of demand, right? And we had about 100 million barrels of supply. Regardless of everyone thinking that Tesla was going to take over and have all these solar panels everywhere. And I'm not talking down on Tesla. I'm just saying, it takes time to transition. The time to make the big money was in 2020, 2021, 2022. I hope you have taken some profits. And if you're investing in it for the dividend, I hear you. That's great. Just make sure you're investing in something that has a good debt standing. So, Hot Kev, man, $1,800 a month is great. Congratulations. I love you. Most people don't realize I started investing in 2019. I'm hoping my high income dividend stock starts buying to Darth. No. It's not the way to look at it. You say this a lot. I'm not a fan. If it works for you, congratulations. I love it. I don't like this idea. I don't like this plan. I don't like it. I'm not a fan. And maybe this is me being pessimistic. Normally, I'm a glass half full kind of guy. Normally, I think this would be. What this says to me, and me paraphrasing this, and keep in mind, I'm not putting words in your mouth, but the way I read this and my perception, once again, right? Your perception is your reality. My perception is my reality. I'm not going to make my perception your reality. You're not going to make your perception mine. So just keep in mind, my perception is reading this from what you write, right? And so you're right for what's working for you, and I think that that's great. But for me, the way I read this is, even though they pay high dividends, they're crap companies. And so I'm going to use those income from those crap companies to buy better companies. If you think the other companies are great, solid dividend growth stocks, you don't need the income today. Sell the crap companies and buy the companies they think are good. That's just my thought process. And I promise, I'm like 85% sure that you will go through the evolution that I did. Unless because you are Darth Dividend, be afraid for your YouTube channel's sake to be like, I'm venturing more towards a broader long-term growth perspective rather than dividends only. So once again, I welcome you, and I appreciate what you do for the community. So me being harsh with you is just because I've lived through where you've lived, and I think you're going to do really, really well in your career. And I think eventually you'll see things from my perspective. Um, I used to only care about the dividend income too. People would be like, "You're underperforming the market. You're underperforming the market." Especially in 2015 when I was like all oil and gas, like 40% oil and gas dividend stocks in 2015. And I was like, oh, I don't care, the return annually. I just care about the dividends, So tables turn, man. $1,000 in the S&P, 1,000 in QQQ, and 1,000 a month in the Palantir. 1,000 a month in the Palantir is aggressive, my guy. I would hope that Palantir is not 33% of your portfolio. If it is, if it's within your risk tolerance and you're cognizant of that risk, go for it. I personally would never want a stock, unless I was severely convicted, to be more than 5% of my portfolio. What's your work-life balance like? 40 hours, 50? I used to work a lot more. I've taken some steps recently with the organization to take a little bit of a step back, have a little bit more breathing room. So it's probably more in the long lines of 40 hours a week now. What do I do in my free time? I annoy the crap out of you guys on Twitter and YouTube. So the green screen is top notch, my guy. It is. If the green screen was open, too much light would get in. Although it is I think it's kind of rainy out, so it wouldn't probably be too bad. But yeah, green screen in full effect. I pay hundreds of thousands for it. If you look really closely, you can see in between my hairs, the green, and it's like fuzzy. Sometimes if I move super fast, no, there's no green screen. I like the joke though. The green screen gang, always there. It is really cool. I love like the nighttime view. It's like a plus minus. Like if I have this on during the day, I have to have like the shades down so you can actually see. Otherwise, it's too bright in here. There's too much. I got like whitewashed and stuff like that because the sun comes in. Sorry, some sleep in my eye. And then at nighttime, you can't see the lights downtown unless you have all the lights off, and then you can't see me. So it's a catch-22. I should just get a real green screen. I wouldn't have the problem. You know what I mean? The Q's straight up, not a big deal. I love that. Probably going to start VOO for your brokerage account each month, dividend growth and price. Hot dividend, Darth of dividend. Starting to see. Real Madrid. You heard it here first. Yeah, some people like to trade, man. I get you. Check out Retired Working for you channel. Dude retired in Thailand. Has tons of vids about the detailed breakdown of cost. Great channel. There's a few, man. There's a few great. I was watching a guy earlier. He said he just built a house. I think he's in his mid-30s or late 30s. He started 15 so years ago teaching in Thailand, English in Chiang Mai, and he just built a house. And I was watching it, and so pretty cool. Good for those guys, man. In 2021, I almost made that step. I was getting pretty burnt out, and the pandemic was really eating me alive. And I thought, and this is when I was generating a crap ton of options income. The VIX was up. I could read the market like a book. And this is late 2020, early 2021. I could read the market like a book. We were adding $85 billion a month to the balance sheet. So the bond market was obviously really, really, really low and inflated. And that inflated assets. And so anytime the market went down 5%, you just sell a bunch of puts, and then a week later, you'd be freaking filthy rich. So I was doing really, really well. And I was like, man, if I can keep this up. I was like, I got marketing income from YouTube, options income, YouTube income if I have enough people watching and I'm doing it full time, dividend income. I'll retire today. I still could. I mean, listen, people. If I moved to Thailand today, I'd be fine. I'd be perfectly fine. I could do it. I just don't know if I'm ready to hang it up yet. I'm still thinking like an American. Are we back in a bull market? I think it's too early to tell. I think end of February, or sorry, end of January, early February, we'll have the FOMC. I think we'll raise half a point instead of a quarter of a point. March, we'll have data from January, February for CPI. I think we'll do quarter point in March. And then whether or not we go on a break or not, I don't know. But I think you have to get through the March reports and the FOMC meetings before you could truly determine whether or not. So yeah. Many dividend investors overlook great growth opportunities. Yes, I did for a long time. Sitting in AT&T for growth. Amen. Wine and farmland. That's what I heard. I heard the rumblings are. I am trying to get a few CEOs, not paid, just for the sake of the channel, get them some exposure and hang out and listen to some great CEOs. I'm trying to get some of those guys on here. I don't want to say who yet because I haven't finalized it. In fact, they messaged me and I didn't ghost them, but I forgot to message back if I was in the middle of something. So this reminded me. So thank you. What do you think about upcoming weeks for market? I think it'll be volatile, man. Lazy, overpaid, work from home staff are getting laid off. Well, luckily I go into the office. Hi, Chris. I appreciate your perspective last night, my guy. As always, you're a breath of fresh air. You're somebody I trust. Building up RQI. Well, it's down. What's up? Broke Expat John, what's going on, my guy? Long time no chat. Hope you're growing good. Sell it when it goes back up, maybe. Hot Bailey, love of my life. Oil, China reopening, starting to make a difference. Although, to be fair, they're going direct to Russia on the cheap, along with India. I agree. The thing that scares me a little bit, the dollar is doing well right now. A lot more talk because of this whole Russia thing, which initially is why I thought Russia was doing it potentially, is to throw. And now I think it's more like geopolitical and with respect to trying to posture. But I think Russia's influence is dying. So I think that if they needed to do something to gain more and more influence, otherwise they'll continue to die. But I think part of this is a detrimental to the dollar because globalization really helped the U.S. petrodollar. Now that things are being bought in yuan, and other countries are still wanting to not take sides, they're starting to deal in things like the yuan and the ruble instead of the U.S. petrodollar. And so that causes problems a little bit. But I'm not 100% convinced that China's going to make a huge difference on the demand side. I mean, shit, we had a build. Like the past 2 weeks, we had builds in the reserves for the U.S. Where's all the demand gone? Like we're not talking little builds. We're not talking 1 million barrels of build. Last week or this week, literally Wednesday. So I guess it's the reporting for last week, 2 weeks ago. 8 million barrels build in the U.S. That's huge. That's a day's worth of production in the U.S. It's half a day's worth of what we use, but like the fact that we're building, 1 million barrels of oversupply in the oil market will tank the price if it's consistent, right? Because the markets are always forward looking, right? So if you can tell, and that, let's just say, for example, for a fact there's going to be 1 million barrels of oversupply for the next year. Oil price will be in the 60s. Maybe not 60, 65. If you know for a fact. Now, there's always going to be a premium because you never really know, right? Something can go offline, facility could be attacked, war. So that's why I think things are trading up a little bit. But if that oversupply continues, right? So like demand went away completely in 2020. The reason why oil prices went negative was a different reason, but yes, there was a huge decline in demand. But oil prices popped back up, right? To like the 40s, 50s. Dex, what's going on, my guy? Yeah, biggest mistake, Dev, that I had was not investing in crap. I forget what ETF it was. Fidelity had a good ETF, and it was like Tata Motors and a bunch of others companies that have done really, really, really well. I'm not a wizard, but I am a trillionaire. So, lazy, overpaid. Only have to look at bank layoffs to see it's majorly been pointed at relatively new starters. Those are smashing at 80 to 100-hour weeks. Ooh. Jeppy is good. It's a decent dividend, nothing too crazy. Not worthy of your dollars. I'm not sure which one we're talking about. What do I eat in a day to save money? I don't really focus on eating ramen and stuff. Although early in 2022, when the prices were going down, I did switch to like eating ramen and peanut butter and jelly sandwiches as a joke. But actually, I did save a little bit of money that way. And I was investing a lot of that into the stock market. Would you agree for low income earner, dividends are the way to go? I don't think so. Not 100%. I also I think it's very subjective, but I think you honestly have to think about the personal finance piece. You weren't here when I was talking about this earlier, but it's nice because you're able to kind of like buy back your time, right? And you're able to see it day one. But I think you have to recognize, you have to take a step back. You have to realize, sorry, I had some hair on my keyboard. And then you have to realize, where are you in your spectrum, right? Like, let's say you're in your mid 20s and you have $0 saved and you're going to be able to save 15%. That's the only thing you're going to be able to save. I would not focus wholly on dividends. And that's the thing. When you say something general like dividends, does that mean you're going after the QILDs of the world? Or does that mean you're going after the Dr. Peppers of the world? And I think you need to, like, it's like me saying I'm investing in the stock market. 7,000 different companies you could choose from, my guy. Or indices. So you have to recognize, like, that's the hard part, right? That's not the one size fits all situation. It's not the rule book. It's why you could read 18 different people's books and they'll give you 18 different answers. But this is mine. And the reason why is because all 18 of those people are probably right. Probably 17 out of 18 of those people are wrong for you. So somebody's perspective isn't your reality isn't their perspective. So, and it goes back to what I said earlier. So apologize for those of you guys who are sticking with me and I'm repeating myself. But somebody, like, how do I say this? For example, Gabe from GS Strategies, great friend of the channel, loves options, great technical analysis guy. He'll tell me the S&P 500 is going down. And you should short it through options, buy puts. I'm telling you, I've never been buying more of the S&P 500. I think it's going up. It's about perspective. I'm looking 5-10 years down the road. Gabe's looking between now and July. We're both right. Most likely. We're both right. So when you say something very general, it's hard to be like, is this guy right or wrong? Somebody could say, I love real estate. You might be like, this guy's rich. I'm going into real estate. You might have to work 100 hours a week. You might be one of those bankers that Bailey's talking about. You might be somebody that doesn't have any time on the weekends to plunge toilets or do renovations. And you're like, this guy's like, I've made all my money through sweat equity, through investing in cheap homes that are in expensive neighborhoods. I flip them, rent them out, and make a huge amount of money. I pull my money out and I buy the next one. You might be like, this is the way to go. This is the way to do it. This guy, I've known him for 10 years. Richest guy I know. You do it and you fail because you're working 80 to 100 hours a week. And the only breathing that you can do is when you're in your off time. And that time is mostly spent breathing while you're sleeping. So you guys have to understand what was right for you. I've been working, however many hours a week. I didn't want to do the real estate thing. I was nervous. I was afraid how much time it would take. I realized for me, I love liquidity with my investments. Stock market's good for that. I was afraid of getting involved in real estate because of how much time it might require. Now I'm at a place where I could share that load with somebody. I have a partner. I could share that load with somebody. If anything needs to physically happen, they have to do it because it's in New Jersey. I'm in Texas. So I'm fortunate to have them. It's a good friend. I've known him for going on 20 years. Crazy. Getting old. And I'm able to do the Airbnb thing, help him with the VRBO. He's doing VRBO. I'm doing the Airbnb. We're splitting the time. So it makes sense. It helps, right? But before, I would have been scared shitless. And so I have another friend who saw us do this deal, and they're inspired, right? I mean, I'm excited, right? I'm very excited about this Airbnb opportunity. I think it'll do really well. I think we're going to end up with a 20% cash on cash return. Right now, without any further bookings, we're looking like we're going to break even cash on cash return, inclusive of equity appreciation, which we hope the market pulls back, the rates pull back a little bit so we can refinance. We didn't get the best mortgage rate, but still, it was a no-brainer. We knew we were going to make money. We knew we weren't going to lose money. In the worst case scenario, we had a beach house to go to cry in if we were losing money. And it wasn't really that much money for each of us every month. So anyway, this person starts asking me a bunch of questions. It's a family friend, if not a family member. I don't want to put them on blast. They get excited. They're like, maybe we can do it. I'm like, you also work full time. You would also, do you want to flip? Do you want to, and the place that I bought was turnkey, right? This person was selling their portfolio to move to a different state. And so we were lucky enough to be purchasing part of their portfolio. So we paid a premium, but the cash flow made sense, right? The person was making an absolute killing. This person had bought the house for about, 40% less. Did some finalizing renovations. 2021 happened, blew the market out of proportion. The guy was able to sell it for 40% more than he bought it for. Sorry. 70% more than what he bought it for. Granted, he put some sweat equity into it. He finished it. He got it on Airbnb, made the cash flow, everything of the like. So, he was able to demonstrate the value of a position like that. And, it paid off for him. He was able to make a 70% return in a couple of years. I don't know how much, if he had bought it cash or what. So I don't know the situation there, but regardless, I'm like, so you're telling me you want to work full time. This person works full time, have kids, have to deal with them. And on the weekends, you're going to have to force yourself to go 2 hours away to try to flip this home. Plus Airbnb it for the summer, VRBO for the summer. I was like, it takes a lot of time to do that. Not also inclusive of, trying to get it done all before May, June of this year when you're going to start having renters. So it's like, that's a very difficult situation. Are you thinking about this through? Are you thinking it through? Right. And I think a lot of times we try to rush into things. You need to be more carefully approached. in the way that you move sometimes. And think, this person made money, so I'm going to make money doing it, right? That person may love, like that person might be a carpenter. They might be able to save 30% on any carpentry that they do. Same thing with the people that day trade, right? How hands-on do you want to be? So, oh man, I'm way behind. I'm like 20 minutes behind. We'll try to skim through these. Dart dividend, if you're looking at that sort of outlook, maybe a variant of the dogs of the Dow would give you good results. Just buy good companies. Thanks, Bailey. I paid her to say that. Bailey, your check's in the mail. SVOL. Exactly, right? Thank you, Broke Expat. Yeah, I mean, I'll just be blunt, right? I mean, I'm north of six figures. And when I say north of six, I mean, I'm at 7 figures, right? I mean, I'll stop beating around the bush. I'm in a different situation than some of you guys, right? And I'm not trying to brag. I'm just saying, like, I'm trying to put in perspective, right? Your perspective is your perspective. Mine is mine. What works for me might not work for you. So Kyle does things better on his own. Game K31. Yeah, he works better on his own. Forget FOMC or CPI in March. We got to go through tech earnings yet. Important next leg up or down. I'm very curious, Miss Bailey. Very curious, and appreciate that it's late for you. So I appreciate you being on here so late. But you're always a good supporter. I always appreciate and love that from you. Huh? Do you think earnings are going to be that bad? I don't think earnings are going to be that bad. I think maybe this is like the glass half full part of me. I think that the reason why there's so many layoffs is because there's been so much growth. You had Google increasing year over year by 30%, Amazon doubling their workforce in the matter of 2 to 3 years. I think this is an opportunistic time to reset a little bit, gain a little bit of efficiencies. The problem that I have is companies, when they grow, they generally speaking grow too fast. And the problem is with the thing that I've been experiencing is like Google specifically, it's like I respect they want to grow. But I think they do need to shrink. I mean, if you look at their year over year employee growth, I think they were at 170,000 employees, one of the last, and people are like, oh, they're going to go to 155,000. You know when the last time they had 155,000 employees was? 2021 or 2022, right? It's not like we're getting rid of, and the year before that, it was like 130,000, right? So we're growing 10 to 15% a year. So we have nobody talks about that, but 1 year we decided to cut the workforce by 5 to 10%. And I'm not advocating for it, right? But I'm just saying these companies have delivered so much value. They grow. They become such an intricate part of our economy. And growth goes from 30% to 8% and everybody loses their minds. It just doesn't make sense. It doesn't make sense. If you like the stream, there will be world peace. I love that. Lord Slade, what's going on, man? To Dave, watched every hiking video, so I got Jerry's shirt. Hey, he is still alive, man. And I poked him, and I didn't have a phone conversation with him, but I was getting concerned. And I was on GW's stream the other day, and he was there, and I was like, Dave, what the F? I've been messaging you on the Grammygram. And Dave, he doesn't like, he tries to stay out of, as smart as the guy is as a computer guy, right? I'm not sure if he's a computer scientist, computer engineer, whatever, but he's good with computers, good with coding. As much as he is, he's not into the whole social media thing. So he has to force himself to do the YouTube stuff. But I poked him on Instagram, and then I saw him on GW's channel, and I was like, yo, you ignoring me, man? Like, I thought we were bros. I was concerned. Didn't know if I had. So apparently Dave's hanging out in Florida. Sorry, Dave, if I'm blowing up your spot. I don't care. People could search for you. Send out a search party for Dave in Florida. Let me know if you guys find him. And he's alive. That's all you need to know. and he messaged me back on the Grammy Grams. He was logged into his other account. So he was logged into Hidden Off Grid. I was messaging on Hidden Freedom. So he didn't realize he was getting messages, whatever. That's probably all a lie. He probably has me blocked everywhere. And that's probably what it is. But I don't know. When are they going to buy back the reserve barrel stock? I thought they were meant to be coming at sub 80. Oh, you mean for the strategic polar reserves? I think Biden said he's not ready. I think he's waiting for like sub $70. So I don't know. But it was interesting. I don't know much about the SPG, but I heard it's not going to be anytime soon. But what I did hear is that Chevron and Conoco are finally getting some of their oil back from Venezuela. So Venezuela is actually selling them oil as part of, and I don't know if it's free or discounted or what, but basically in 2015, when they had the whole sanctions and stuff, the government of Venezuela took over Chevron and Conoco's assets. And so now they're finally starting to get a little bit of a payback. So it's kind of cool to be able to see. This channel's relaxing. Thanks, my guy. Thank you. Thank you. Hopefully you share with friends, family. Hopefully you're learning something. That's all that matters to me. And hopefully you're able to see a good perspective and come up with a thing that works for you, right? Not everything is going to work for everybody, but hopefully you're able to realize. Gabe is a good guy. He's GS Strategies. He does options mostly. Jesus Martinez, what's going on, my guy? Hope things are well. No day trading. No, sorry, I'm poor. How old am I? I'm 31. Kyle is very controlling. Roll on the floor. He's an okay guy. He's set in his ways, and I wish nothing for the best for Kyle. And I'm glad he's still doing well. I saw I got to 16,000 subscribers on YouTube, which is great after 4 years hustling every day, making a video, over 1,200 videos. I'm glad he finally got to 16,000 subscribers. There's more than me, so he's obviously doing something right. And I know he's doing well at the whole marketing thing. So I'm wishing the absolute best for him, and he'll continue to do well. I just think that he's got his agenda, and mine is, I think, a little bit different. So I view this as fun. I view this as something where I can help. I don't view this as entertainment per se, although it's probably labeled as entertainment, and it is technically entertainment because none of it's financial advice. But he is looking at it from a entertainment perspective, right? I do it to help educate a little bit any way that I can. So different. I remember when you had just 300,000 a little over 4 years ago. Yeah, man, consistent contributions to the portfolio. Yeah, so a lot of contributions to the portfolio, and a lot of effort, time. It's been, I think I started investing in 2012 mostly. So I got some internship money, same company I work for now, internship money that summer, and started investing a little bit. Dividends were the key thing. Dividends got cut because it was all natural gas stocks, or some of them were natural gas stocks. I thought they would go to the moon. Dividends got cut there, and some Sony stock, some cancer stock that I thought would do really well. And then I saw Sirius XM was there as well. And then I sold a lot of that, and I started buying into like a few other things. Yes, Kyle's a magician turned investor. I can't. I mean, I'm an engineer. I'm turned engineer / investor, and made a YouTube channel out of it, and it is what it is. 68. Yeah, 68 invested in dividends. I don't blame you, especially if you're living off of them. I think that's a great strategy, right? So I'm not in the state where I'm living off my dividends, right? So These are two great perspectives to look at, right? You have Frazzled Halos, who's 68 and she's living off her dividends and needs those. That'd be somebody where maybe you don't need them. Sorry, I'm inferring here, but you know, you're later in life, you're not necessarily caring about the growth aspect of things maybe as much. You're more so focusing on the stability, consistent income. Whereas me, I have a certain lifestyle now. I'd like to have a home. I'd like to have the ability to kind of like be a little bit more hands off with finances, focus specifically on the SPY. So I'm trying to get a little bit more aggressive into the growth aspect of things, so that way I could potentially break through another. And I went on a little bit earlier in the stream, specifically talking about, the difference between 2.5 to 5 million for me wouldn't be too much. I'd maybe live in a nicer home, and maybe take a few more vacations per year, but the day-to-day life probably wouldn't be that much different. But it really would probably start to change when I got to 10, 15 million, 20 million. I'd probably be in a different sort of place. So that's kind of the goal, is to get to there and find somebody that wants to share it eventually. But yeah, that's Bailey. I'm surprised you're still here. It's getting pretty late over there, 10 o'clock or so. So, but yeah, it's Frazzled Halos. So really appreciate that perspective, and love that you're still researching the finance aspect of things. And I know I've seen you around the channel a couple times, so I appreciate you continuing to be a supporter of it. But I do want to say, unless there's any final questions, maybe I'll go on a little soliloquy here. I don't know if that's even the right word. Monologue is maybe a better term, for a couple minutes. And if there's any final questions, maybe I'll finish up here. But I really hope that 2023 is a great year for a lot of you guys. I appreciate we learned a lot over the past 3 years, obviously going through the pandemic, and then kind of sustaining back into stability more into 2021. And then obviously with the uncertainty globally in 2022, and rather the continuation of that onto 2023. It's been a very crazy past couple of years, but truly appreciate everybody sticking by, especially with my intermittent postings, flirting with marketing, as well as flirting with my own sort of personal videos about investing and stuff like that, and how my point of view has changed. Some of you guys are very much dividend focused, and you don't like the Palantir videos, and I respect that, right? And then some of you guys are all about Palantir, and I think you get frustrated. Like, Matt invests in dividends. What the hell is this dividend? Nobody cares about dividends. Give me all more about Palantir. And we got somebody chirping up. Nate's chirping up about Rocket Lab. So yeah, I mean, I think it's pretty funny. All walks of life. And at the end of the day, I'm hoping I'm just providing a great prospectus for you, or not prospectus. Sorry, I saw prospectus in the chat and it threw me off. Having a great community and perspective, providing you guys with perspective as to how to be best investors for yourself. I'm never for somebody being one way. I used to be like, dividends are the only way, right? I used to be a Darth dividend, where and now I've kind of come to the middle ground where I'm like, I see where some people are, right? I see where some people might be VCs and they're trying to get that 1 out of 10 investment to be 100x, 200x, so it can sustain the rest of their portfolio, and they've already made their money, so that's really trying to really get to. And then I can see the people like Frazzled Halos, which are folks that are more so focused on the dividends space. I don't recommend those people get into Palantir unless they have the excess capital and they're like, you know what, I got $100, $500 that I can allocate to it, and I'm okay if I lose all of it. And so I think there's a wide spectrum, and that feeds into real estate as well. Not all real estate fits all. It's like stocks. So to an extent, with respect to there's a wide range, right? Single family homes, multifamily homes, industrial, commercial, all that sort of stuff that you have to take into consideration. Anyway, so yeah, John, I appreciate the pushback, man. It's always nice to to get pushback from people, because I think a lot of times people do bandwagon, right? I'm sure there's a lot of people out there, unfortunately and fortunately. Maybe I'm too soon in saying fortunately, but unfortunately, that have followed me into Palantir, and it put way too much of their funds into it, 20, 30%, whatever they have into it. Unfortunately, because I'm invested in it, I do not recommend that. Full stop. I'm an advocate for somebody putting 4 to 5%, something they're willing to lose, into it and being calculated in the risk that they're taking on. Full stop. And I think a lot of times people twist that around a little bit. So appreciate everybody continuing to be on here and continuing to share. I think this is probably one of my better streams that I've done solely on the channel. I've been in streams now that have 200 people plus, specifically like Palantir Weekly. You know, we do those every Friday on Amit's channel. I'm sorry, I completely, unfortunately, ignored Nate's comment. Rocket Lab Monthly. So the next launch happens on Monday, 6 to 8 p.m. Eastern time is the window. 85% chance of success it'll go off due to wind again. So once I find out a little bit more about when the actual window is, and once maybe the window starts, I'll schedule the weekly. Hopefully I'll get Cole and maybe a few others. Maybe I'll get Amit. Amit doesn't know much about Rocket Lab, so maybe it'd be an opportunity to do Rocket Lab Monthly on his channel, because I know eventually him and I are going to do a collab on it, because he doesn't know anything about it. And I've sent him my video, 30-minute video, kind of overviewing their investor day that they did. Was that in October, November? It was really good. 2-hour presentation that they'd given. I'm surprised at how far they've come in the past 2 years, personally, and I'm surprised that they're actually about to launch from Launchpad 2. I think that's crazy how quick they were able to turn it around. But what was I going to say? But yeah, so hopefully Rocket Lab Monthly coming soon. Trying to think. Only thing you're big on is MO. I like the diversity into some real estate. MO is not bad. They have AB InBev. Sorry. Yeah, AB InBev investment. They have some wine investments, but I think they sold some of that off. And I think they have some, not Sherwin-Williams. Why am I drawing a blank? They have a cigar company that they bought a year or two ago. I don't smoke too many of those, so that's probably why I'm drawing a blank. And trying to think what else they have. I mean, they have the Juul investment, and they have the MJ investment future. But I recently sold out of MO. I like MO, but I'm just, it jumped up to $54 or something like that. And I was like, I think it should be in the 70s, 80s if it wasn't getting hit so badly with the regulatory, and it wasn't getting hit so bad with all the Juul downgrades and the Kronos downgrades and the equity hits that they had to take in the mark-to-market accounting. But I was like, you know what? Do I really see it going up 2-fold, 3-fold, 4-fold in the next 10 years? And the answer was no. Well, it's great dividend. Great dividend. I think that's very fairly secure. I have a lot of security in my mind about the dividend memo, but at the end of the day, strategically, it didn't make sense. It hurt because it was $500 a quarter that I was making, but yeah. John Middleton, Black and Miles, yeah. Anyway, I appreciate everybody. I really do. And if you guys have any thoughts, suggestions about videos, or anything like, please put them in the comments section when I end the video. Hit the like button, share with family and friends, introduce them to me. That's the easiest way for the channel to continue to grow and thrive. And of course, if you get any sort of benefit from the perspective, the lens that I bring, I encourage you to share that with others, because it might help them in their investing journey. And that is the main goal. Do I like JEPI? Yes. I've if you look, JEPI is one of my top 15 dividend pairs for 2022. Feel free to look at one of my I think second to last video, where it's the top 7, actually. highest dividend paying companies in 2022 for me, where I made $24,000 in dividends last year. So hopefully you get a good glimpse of that. Thank you guys so much. Appreciate it. I'm going to maybe take a nap, maybe watch the rest of The Walking Dead, because that just came out. The rest of it came out on Netflix. But regardless, appreciate you guys always, and I'll talk to you guys soon. Cheers.